Today we're looking at a really high-energy analysis report on AST Space Mobile.
The one focused on that big 15% price jump, right? And the December 24th launch.
Exactly. That date is basically the entire story here. So let's just, jump right in and see how we can make this report even sharper.
Let's do it.
So the first thing that really jumps off the page, you can't miss it, is the tone.
Oh, yeah.
It's all, stop what you are doing, and, this red alert countdown. It's clearly meant to be an ASTS emergency update.
It definitely succeeds in creating that initial shock value. It grabs you.
It does. But I worry about who it's grabbing. For a professional, for someone who knows this space is volatile, does that level of urgency signal hype over substance?
And I think that gets us right to our first piece of feedback. The overall style of the analysis report, it leverages so much extreme urgency and FOMO that it actually risks undermining the credibility of the market analysis it's providing.
Tell me more about that risk. What are we actually losing by being that aggressive with the tone?
Well, the weakness is that the tone feels highly promotional. You've got phrases like, missing one of the most violent moves, or nobody wants to be left behind on the tarmac.
Right.
And look, that captures energy, I get it, but it fundamentally shifts the focus from, a disciplined financial evaluation to something that feels more like immediate reactive speculation.
And for an expert audience, that's a red flag.
It's a huge red flag. It can signal an amateur approach no matter how good the underlying data might be. You're not building conviction, you're just cheerleading.
Okay, I see that. But to play devil's advocate for a second, this stock really is on the verge of a huge move, one way or the other. If we temper the language too much, do we lose that essential immediacy? Does it just become another bland analyst note?
That's the challenge, right? And it's a good one. The suggestion for improvement isn't to kill the excitement, it's to temper the sensationalism. You want to frame the importance of the launch using language that respects the volatility, but also anchors that excitement in hard, measurable facts.
So the urgency comes from the data, not just the adjectives?
Exactly. We want high conviction, not just high anxiety.
So how do we actually do that? How do we sound both urgent and intelligent?
Okay, so let's get into some concrete examples. Think about the hook. Instead of stop what you were doing, which is, very high energy.
Very YouTube-y.
Right. You could reframe it something like, the recent significant price movement necessitates an immediate, data-driven review of the ASTS catalyst timeline ahead of the confirmed December 24th launch. It's still urgent, but it's grounded.
It sounds more professional, for sure.
And then, when you're talking about the price action itself, instead of the stock just ripped 15%, you could say something like, the stock experienced a significant 15% valuation increase driven by heavy volume and pre-catalyst positioning.
I like that. The energy's still there, but it shows you understand the mechanics behind the move.
Precisely. It elevates the whole piece. The urgency feels earned because it's justified by financial evidence.
That's a great point. Grounding the urgency in facts is crucial. And that actually leads right into my second point, which is about the balance of the argument.
Okay.
The report makes a really strong, bullish case. It links the Block 2 satellites to the contracts with AT&T, Verizon, Vodafone. It paints this picture of 2026 being the year the company becomes a cash-printing machine.
A very compelling picture.
It is. But then it gets to the risks, and it feels like an afterthought, like a quick, almost obligatory paragraph at the end.
Right, they build this fantastic future, but spend about 2 sentences on how that future might just evaporate.
So here's the feedback. The analysis report dedicates insufficient, specific detail to the inherent risks and failure modes associated with the December 24th satellite launch, creating a real imbalance in the discussion.
Exactly. For a catalyst this big, this time-sensitive, the downside needs equal analytical respect. The weakness here is that the current risk assessment is just so generalized.
It's basically, space is hard.
Space is hard, rocket launches have risks, and then it moves on. But a launch failure for ASTS isn't like a delayed product launch for Apple. If Block 2 fails, the entire revenue timeline is compromised, maybe the whole thesis.
So just a simple warning about volatility doesn't even begin to cover the potential downside.
Not at all. It doesn't prepare the reader for that kind of cliff-edge risk.
But isn't there a danger of getting too into the weeds? Listing out highly specific risks like an ISRO LVM3 rocket anomaly. Is that too much technical detail for a financial audience?
I don't think so, not for this stock. Because for ASTS, the outcome is the technical detail. If that satellite fails to deploy its solar array, for example, the 2026 revenue thesis is instantly pushed back a year, maybe more.
So you can't separate the tech from the finance here.
You can't. And that's the suggestion for improvement. The risk section has to be expanded. It needs to actually model the potential price behavior under specific failure scenarios. It has to show how a negative event impacts the timeline and that core path to revenue argument.
You're showing your work, essentially. Proving the analysis is robust enough to handle failure, not just success.
That's how you build real trust.
So how do we make that risk profile truly actionable? What would that look like in practice?
You need to swap those vague warnings for clear financial consequences. So, for concrete examples, you would state specific, known risks. You mentioned the launch vehicle anomaly. That's one. Another is a failure after separation, like the solar array deployment. These are known engineering hurdles.
Okay.
Then you attach a financial consequence. So instead of just saying the stock will drop, you provide actionable context. Something like, if the launch is delayed beyond the new year due to vehicle issues, we anticipate the price will revert toward analyst targets in the $40 range, reflecting a de-risking of the near-term catalyst premium.
That's specific. You're giving your reader a number to work with.
Or even better, analyze the specific impact of a partial Block 2 deployment success on the projected 2026 revenue schedule. That gives an expert something they can actually plug into their own downside models. It's useful.
That really drives home the need for rigor. Okay, let's shift gears now to the third point, the technical argument.
The short squeeze.
Exactly. The report claims this 15% move is fueled by smart money positioning that's setting up a short squeeze. It points to the spike into the close and says that $100 is now a price magnet.
It's a very powerful claim. And if it's right, it's a huge deal. So the evidence has to be just as powerful.
Which leads to our critique. While the report accurately identifies strong market movements, it needs to establish a more rigorous and supported causal link between the technical setup and that impending December 24th catalyst.
I couldn't agree more. I love the aggressive positioning, but here's the weakness. The claims about the short squeeze potential. The shorts are terrified, the float is tight. They're presented without any quantitative backup.
They're just assertions.
They're just assertions. You can't just claim there's pressure. You need to show the market is a pressure cooker about to explode. Without that hard data, the argument that $100 is a magnet feels like it's based on speculation, not technical pressure.
So the solution isn't to walk back the claim, but to prove it with the metrics that technical traders actually use.
Precisely, and that's the suggestion for improvement. You have to bolster the analysis with specific data points. Use concrete, established indicators to substantiate that short squeeze theory. You have to directly tie the short interest levels to the urgency of this launch date.
That's what grounds the whole thing in reality.
It makes it impossible to dismiss as just hype.
Before we even get to the numbers, though, I think we need to justify the trigger. Why is this launch, the Block 2 launch, the thing that finally forces shorts to cover? What makes it different from previous test satellites?
That is such a critical point. It's the narrative that's missing right now, and it's vital. You have to spell out why the market sees Block 2 as the moment the company goes from R&D to commercial viability.
So the earlier tests proved the tech could work?
Right. But Block 2 defines the initial commercial capacity. That's the shift. That's the narrative engine that powers the squeeze thesis. You have to explain that first.
And then you bring in the numbers to back it up.
And then you bring in the numbers. For concrete examples, the report absolutely must provide the specific short interest as a percentage of the float, and ideally the days to cover metric.
So you can say something like,
You could say, with 35% of the float sold short and days to cover exceeding 5, the technical foundation for a squeeze is extremely fragile ahead of the confirmed launch. That clarifies exactly how tight the float is in hard numbers.
and what about the smart money claim? How do you prove that?
You look at the options chain, detail any unusual activity, maybe a huge buildup of open interest in calls way above the current price, or aggressive call buying at the $80 strike. That's powerful, quantifiable evidence that big players are positioning for that violent move toward your $100 target.
Okay, this has been a really deep dive. I think the original material did a brilliant job capturing the urgency, the time-sensitive nature of this December 24th catalyst.
It really did. The energy is there.
But to maximize its impact for a more sophisticated reader, it needs that more disciplined, balanced, and deeply evidenced approach we've been talking about.
That's right.